Welcome to the DeFi Standard. This is Patty XRP, and I got
Mickey B. Fresh. And today I'm going to dive into the commercialization of decentralized finance and why this is going to be the future of the financial markets in the years to come. And we hear a lot about this regulatory crackdown from the SEC going after Coinbase, going after down possibly Uniswap. You know, we understand the lawsuit with Ripple, but with decentralized finance, there are certain aspects about the decentralization of it that are out of the reach of the regulators here. And this, we have a couple of videos from Teeka Tiwari that are just phenomenal, and he really breaks it down in a way that shows you that in 5 to 10 years, it's going to be just a part of your life. So now's the time to get educated on this and try to avoid the noise of all the SEC and the distractions that are going on. Those are important to pay attention to, but you don't want to dismiss things like DeFi and decentralized finance because those are the future for the financial system. And that's what we're going to talk about in this video. And also, Patty's going to go into how decentralized derivatives are probably going to be the next phase of how DEXs and decentralized exchanges progress forward and swallow up part of the traditional markets, tokenization, and the centralized exchanges. And that will all converge at some point. But we're just in the beginning of this marathon of decentralized finance, and the commercialization of it is going to continue. And the networks that are decentralized, so we have blockchains that are decentralized, but now you have the applications that need to be decentralized as well. And with those, we have decentralized autonomous organizations, which is going to help decentralize those applications. And for example here, before we get into it, I just want to touch on the F asset system in the Flare network and why Spark-dependent applications are so critical to the design of the Flare network. The F asset system is an application built on top of Flare, but it's governed by the Spark holders. That brings decentralization to that application. Even though it's implemented, the protocol and the code is implemented by the Flare limited team, the actual application is governed by Spark holders, and it utilizes the decentralized Flare time series oracle. And that's very important moving forward. The more decentralized these applications are on top of the very decentralized blockchains, the more they're going to be out of the grasp of the regulators in the future. And we know the Flare network is going to be decentralized out the gate. Now, why is it going to be decentralized out the gate? Because it's bootstrapping its decentralization off of Litecoin, the XRP ledger, Stellar, and Doge. And we have validators in the state connector system that connect to those networks and also to the Flare networks. So we're going to have decentralization of the consensus. Now, the token itself is going to be distributed in an airdrop. So that's going to be a fair distribution model of the token. And then we're going to have the governance of the Flare network is going to be controlled by the community, and that's the Spark token holders. So you have this fully decentralized network out the gate. And I've gotten a lot of questions. Well, is any of this regulatory stuff going to apply to Flare? And the answer is an absolute no, because it's fully decentralized and there's no token sale. So Patty, let's get into some of the things that Teeka Tiwari talks about here in the commercialization of decentralized finance.
absolutely. And with this, this is Teeka Tiwari coming from the London Real website and YouTube channel. They're pretty big and have talked to quite a few people in the crypto space. And we'll link that in the description if you want to check out the full interview. So here's our first.
And what's interesting about them is that they come from the banking elite world. So you get this inside perspective, which I thought was really interesting because they're coming from the banking elite and they could give that insights to us to see where this is going.
Yeah, so like Tico was a hedge fund manager. He's been in the crypto space, I think, since 2015. And then additionally, I believe he was the youngest investment banker hired at Lehman Brothers before they went bust back in the Great Recession. So with that, let's check out our first one.
One of 20 institutions.
Mickey, I mean, that's a great clip right there. He kind of brings it back to the originations of the internet with like TCP IP. It's like, we now have this ability where we can all transact globally, peer to peer, in a trustless manner. We don't have to trust anybody. You don't have to know who they are. You can just do it. You can go to these dexes and swap between different assets. In the future, that'll include things like NFTs, tokenized real estate, tokenized stocks, all of those things. And, we're just at the beginning. While like summer 2020 was like summer of DeFi, I mean, it's exploding at an even bigger rate now, especially with, blockchains like Solana and Avalanche finally launching their like DeFi solutions and protocols. So it's just a pretty amazing opportunity. And I kind of love the point he makes about, like the big financial giants are the only ones that haven't been disintermediated by technology yet. We know basically every other industry, and he named a few, you can think like Napster, taxi service with Uber, Amazon and everything they've done. Has completely just changed the game for so many businesses out there. And that really hasn't happened to finance until now. So, I mean, I guess the bet is, is the government and, traditional finance going to stick together and try and tamp this down? Is that even possible for them to do? Or is this technology and what it brings to all the people of the world so great that it will push through no matter what?
No, that's a great question. And in the next couple clips, he goes in and explains that and how this comes down to, like with the infrastructure bill, they're trying to squeeze out $28 billion now in tax revenue from crypto. And he also goes into, we'll see this next clip, if this was not going to happen with crypto, you wouldn't have Morgan Stanley investing in it, JP Morgan, the Goldman Sachs, all getting into this. They're heading in that direction. They move slow, but it's coming. And like you said, there's certain things that can't be stopped because what is decentralized finance? It's software. So you're interacting with the software. So now you're just downloading an app and I'm interacting with the software. That's all. So let's go into the next clip here and he explains it a little more.
Yeah, so that last part really hits home for me, Mickey, because we talk about, and I think these are some of the first videos we ever did was you really have to learn, like with decentralized finance and our ability to participate in it, it comes with it comes with more personal responsibility than maybe in the traditional financial system, and that's why it's so key to learn and take responsibility for your own finances, because I think a lot of people have realized that the current system we have set up does not benefit your everyday person. And even a lot of the businesses out there, people scream about the 1% and complain about them and how they control everything, but here we have an opportunity where you can go and circumvent them. And are people going to be willing to take that up or not?
Absolutely. And this is like Tiki said there, this is the one opportunity we have to get in front of Wall Street and all the institutional investors and participate first and get there early. And all the information is right there on the internet. There's plenty of YouTube videos. We put out plenty of education. And to understand that DeFi, this is the future, and not to ignore it. Like crypto came, like first there's blockchain. Now, blockchain was the underpinning for all of this. Then we have crypto assets to invest in. But you see how he said you invest.
Oh, apologies, Mickey just cut out right there. But yeah, to add on, what Mickey was saying is basically, our ability to get in early, because we see like this, crypto hasn't maybe grown or, been utilized as quickly as everybody else thought. So with that, oh, there we go. You want to keep going with what you're saying?
Yeah, sorry about that. So we have the ability to invest in these protocols, as he calls them, and educate ourselves to see what's the next protocol. And I thought he brought up a good thing there, is the one who's going to be able to create in a very decentralized way these synthetic assets, which are going to represent equities. They're going to represent different derivatives. We haven't even tapped into the derivatives of DeFi yet. We're just getting there. And Patty's going to talk a little more about that in the future here. But now's the time to educate yourself. With Flare coming, we've had a year, and I've heard people complaining, when are we getting our tokens? But now's the time to educate. Just understand how Flare works, how you have to delegate your vote, and just wrap it. And you have to learn how, it's great to see the XRP community specifically use the Zum wallet and be able to set up trust lines, because this is the beginning of your future for the next decade, 2 decades. It's going to be more and more like this. Yes, it's difficult to learn. It's complex. It takes work and it takes effort, but it does that. That's how you make money. And the institutions are behind on this. So we have the ability, and it's going to continue. There's going to be yes, KYC. There'll be a little clamp down here or there, but DeFi is progressing forward. So instead of sitting there thinking about all this conspiracy theory with the CBDCs and all that, forget about all that. DeFi is where you're going to make the money. This is where the opportunities are. There's more and more tokens being launched. But like he said, Patty, we have to decipher the good projects from the bad projects. And that's important to do, and not just run and chase the next big thing. We have our infrastructure cryptos, right? You have your ADAs, your Polkadots, your Flares, your Cosmoses, your Avalanche. Those are the underlying ones. But on top of them are going to be these protocols for DeFi. And one of those would be like Probity DAO, Flare Finance, Maker, Aave, Kava. Those are the protocols that are built on top then. And those are really where then you could deploy your value. Now, how do you do that? And we have these decentralized wallets like Bifrost, like Decent. You're going to have to learn how to use those. And in the beginning, it's going to be a little clunky. It's going to be difficult to understand. But the more you take the time and the effort to educate yourself, the light bulbs start clicking and you're like, wow, I could deploy this capital. And I know a lot of people gotten into this crypto and it was like trading. Trading's great, but now we have all these tools to go along with trading, lending, borrowing, liquidity pools. In traditional finance, regular retail cannot provide liquidity and earn money. So now we have these new revenue streams, monster revenue streams. And soon we'll have the ability to buy other asset classes besides just crypto, Patty.
Absolutely. And I mean, just think about all the videos we've done on Jack McDonald talking. What does he always harp on? Tokenization and DeFi. So, and we see the Ripple team coming out with that, with the whole sidechain thing. David Schwartz, they're starting to get behind that train as well. So, I mean, things are moving that way, and we're just seeing, the numbers in DeFi increase on a daily basis. And I think like TVL is getting close to $200 billion. So that's total value locked. So that's assets that are in smart contracts within these DeFi applications. So I just think that's really crazy how quickly it's picking up. I mean, if you go and look at what Solana, like it went on a tear, but during that tear, more and more assets were being added into its DeFi ecosystems. So we're right in the middle of it.
I think this is, when people say utility, this is utility.
Yeah.
I just want to make that clear. I've heard people say, well, XRP is the only asset with utility. That's not true.
It's not true. Yeah.
Not true. Utility is staking. In some protocols, it's needed. Utility is using it in DeFi, being able to lend and borrow against it, providing liquidity. That's utility. And more applications are being built. The utility comes from the applications. So we have network rewards. You could use the assets like on Flare. You could take Spark, delegate it to the FTSO. That's a network reward you'll earn. Then if you took Spark and put it in a liquidity pool or in Flare loans or in the Flare farm, that's a DeFi application where you're deploying the assets. And the F assets will be able to do the same thing. What's so great about Flare that is unique, and this is why it's so powerful of a network, is you're going to be able to use Spark in two different ways. You're going to be able to split it up. You're going to be able to delegate that vote to the signal provider, earn, and then you're going to be able to use it in Flare loans at the same time. You can't do that with ADA. You can't do that with Atom. You can't do that with Avalanche. So that's a unique feature there. And then with the F asset system, the network distributes you Spark tokens for just minting FXRP onto the platform. That's a way of distributing the Spark token. And then you could use that FXRP value, which is XRP one-to-one, in any DeFi protocol. So these are ways that we could build wealth. And it's going to be the way to build wealth instead of sitting there riding Ripple's coattails, hoping for the moon. You know, you can do that and you could sit there and wait, or you could build yourself revenue streams and wealth. So it's about finding the right projects, but it's about finding, well, what is the DeFi being built on that I'm going to be able to deploy this asset and I'm going to be able to set up revenue streams. Some networks have staking. Some networks have FTOs like Flare. XRP Ledger, watch, in 2022 is going to explode. So everything that Ripple's building is great. With RippleNet, with their wallets, Polysign, and what they're doing is great. But it's the network itself. The protocol is what you're invested into. And we get distracted sometimes by looking at exchanges, by looking at fiat leak. Sometimes that is a distraction, I think. And it distracts you from educating yourself on what's really going on here, and is the DeFi. And the XRP community is becoming more educated. We have great people like Crypto Eddie and others who are educating that this is the direction where the whole market's going into. It's not just, you know, some projects. It's everything is going into this way. This is going to be part of your life in the future when you interact with a smart contract. It's going to be part of your insurance. It's going to be part of everything. And now we got pension funds coming in. And, you know, do you see the regulators and governments being able to stop something like software? It's going to just swallow the financial space like it's swallowed every other industry at some point. The US will kick and scream and, you know, try to do different things like they're doing now with Goldman Gary, but it's going to get rammed down their throat and there's going to be no choice and they're just going to have to adopt.
Absolutely. And I think, Mickey, with that, we can get into our last clip. And here it is. That's pretty funny at the end. But I mean, that kind of goes to show you. So, I mean, I think people are aware that with automation and things like that in the future, you know, jobs are already being done away with. And, you know, it's going to continue to happen. And I think blockchain's probably going to do a lot of that. It will create new jobs, absolutely. And there'll be new ways of doing things. But a lot of these jobs that are, you know, just middlemen to, like he says, you know, facilitate trade settlement by, you know, just making sure the papers are right or signing off on it. That's stuff that we don't need humans to do. And honestly, it's not efficient for human labor as well. So I know like people always think of that as like a dark thing. It's like, oh, robots are going to take all our jobs. I'm like, well, on the other hand, you know, it could be things that open up new types of jobs that people can do or learn or create new things. So I just think it's going to be very interesting to see how all that plays out. And if it's like what he says in 5 to 10 years, or is it more like 10 to 20 years for us to get to there? I think blockchain can be used for so many different industries other than finance. You know, even like on Polkadot, they have a parachain that's dedicated to like robotics and things of that nature. They talk about having smart cities run as like a parachain within the Polkadot ecosystem. So like that's the thing with like the Internet of Things and all these devices that can talk to each other and do all that stuff. Like a blockchain is a possible place for that data to live in the future and communicate with each other.
Absolutely. And I think oracles is a big part of all of this. Yeah. And what he said there, if you're going to have these equities trading on different blockchains, what do you need? You need price feeds. And this is why I'm going to go back to the Flare network again here. With the F asset system, it has this decentralized oracle system built into the heart of it. It is the heart of the network. So when these F assets come over to the Flare network, you don't have to trust the price feed. Now, at the same time, you're building an ecosystem of oracles. So when we say signal providers, you could also replace that with oracles. That's what they are. They're oracles who bring data into the network. That ecosystem can also be used to facilitate other price feeds in the future for other applications. And that's just going to build a bigger ecosystem here. And now with the same stakeholders, you're going to have agents who are going to be these regulated custodians, exchanges, market makers, CeFi platforms like Celsius's and your Nexos and BlockFi's and other ones are going to be part of the ecosystem. And, having these price feeds are important. And in the future, the technologies are going to integrate. So let's think AI, machine learning, those are all going to integrate with blockchains. So those will be the underpinnings. But like we did on our video 2 days ago about Credo, layer 2 networks are going to be a big part of this. So I want to go back to one other piece that he said here that I think was really important. And you and I have talked about this for a while now. Is he said, like, back in 2016, back in 2018, you didn't really know where this was going, what were going to be the use cases, what were going to be the applications, how were these assets going to be used. Now we kind of see they're being used. Here's DeFi, and it's an explosion, like literally an explosion of different DeFi protocols. They're not all going to make it, but there's a lot that will. So picking the right ones and the wrong ones, and it's not even just about investing in their tokens. It's about how do you deploy the assets into those protocols and utilize those to set up revenue streams. And that's where something like Flare Finance, learning about Flare Finance is going to take a little work. If you haven't experienced DeFi, it's going to be like overwhelming and it's going to be difficult. But you know what? You have to put in the time and effort. Think of the advantage you have versus 99.9% of the other people out there. They have no clue about this. Some might know about XRP, but imagine there's 99% of those people who know about XRP that don't know about DeFi. So you do owe it to yourself, like Teeka says, just learn about it. It just takes a little time, and keep learning about it, and try not to get distracted by those news media headlines and the fear mongering of, pandemics and all those things and regulatory crackdowns and the SEC, because that's just going to distract you away from this opportunity that's right in front of you. It's just simple education. Some people are intellectually lazy and they just don't want to do it. And that's fine. But those that do are going to be able to set themselves up for wealth. And I think we're going beyond the trading. Trading is important here, but now the trading is not going to just happen on these walled garden centralized exchanges. We're going to be able to do it ourselves. You do it right from your own wallet. And you'll be able to connect to Flare. You'll be able to connect to Polkadot. You'll be able to connect to Cosmos, to Avalanche, to other networks too, Cardano and Solana, all these other networks. Even if you missed out on buying the underlying token, that doesn't mean you don't have to learn about the network, because there might be an application on there one day that you're going to want to use and that you could create wealth from. So it's more than just picking the best cryptos now. It's now learning about the whole ecosystem and the whole DeFi market, because it's literally moving so fast, right, Patty?
Oh, absolutely. And we just saw also one of the parachains on Kusama that's already got their spot is called Moonriver, and Moonbeam is the one that'll launch on Polkadot. But they have their Moonriver token that's just on the Kusama Canary Net, and I saw today at some point it was up like 70% on the day. And this is just a DeFi application governance token that's on the Canary Network, Kusama to Polkadot. Like, it's not even on the big leagues yet. So, I think that just goes to show that there's tons of opportunities out there, and if this seems overwhelming, then just focus on one thing and learn that really well. I think there's a lot to be said for becoming a master of one versus a master of none. If you can get in depth into one area, that's something that, could do you well in the future, instead of trying to learn just a little bit about everything else. Having that extra layer of specialization of knowledge can help you pick out things that other people wouldn't realize. Like Mickey's saying, like Cardano doesn't even have its DeFi out there. Flare doesn't either. Like Solana is still pretty new. Avalanche's DeFi is pretty new. So there's still tons of opportunities, and there's still new projects going on Ethereum as well. And there's still many aspects of finance that hasn't even been touched. We've kind of got some of the lending getting involved, the swapping and liquidity provisioning, those things. But, I don't think there's a surefire solution for insurance yet. I know Nexus Mutual's done pretty well, but how is that going to change? Derivatives, some of the bigger ones like Opine are synthetics. those are coming along. They're still not that huge, even though the derivatives market is the largest market in finance, in the traditional financial economy. So, like, I imagine that will be coming over to DeFi at some point. And that's something that will really, really spur institutional adoption along with the regulations getting figured out. But derivatives are huge. And I want to take us over, Mickey, to um, this great blog or research paper that was put out through the Defiant from, I believe it's ISOG Ventures. And with this, they talk a lot about derivatives and how DEXs can facilitate the growth of those in crypto. Here's an interesting chart here from, let's see, September 2018 through September of this year. The blue line here is centralized exchange volume at the spot price. So let's say you go to Coinbase and you punch in, I want to swap, one BTC for, I don't know, what would that be, like 10 Ethereum or something like that. With that, that's just a spot trade. However, derivatives are when you add some kind of time frame onto it. There's also, it's deriving its value from some underlying asset. So, like, let's say you had a future on Bitcoin for the price to be $60,000 at, set, or let's say 3 months from now. You could make an endless number of derivatives of that kind. And now that's expanding the entire market for Bitcoin, maybe not for, at spot, but in this sense with margin and derivatives. And so just looking here, you can see in the centralized exchanges are just getting in derivatives. They had trading one for one with tokens at spot for a while. But I mean, just look at this yellow line is so much higher than what the spot trading is generating. And this yellow one is for derivatives. And then also, here's another one, which people may have seen something like this in the past. Here is, let's see, silver, cryptocurrency, military spending, US budget deficit, coins and banknotes, Fed's balance sheet, billionaires, gold, and that's derivatives. So, like, if that doesn't tell you, like, yeah, so, like, let's say we get to a point where, and I don't know if this is going to happen. I think, like, a lot of the derivatives aspects of DeFi and being used on blockchains is very much being figured out right now. Things that are going to matter like a lot with that, I imagine it's going to be regulations, because you'll have things that are derivatives of security tokens. But if you have derivative of, let's say, Ethereum, since the SEC gave them a pass pretty much, that's something that's totally fine. It's out there. Now, what's going to need to be added in is you're going to need some level of privacy. And then, the custodial controls. So, like, multi-party computation and those kind of things. And with that, that's when we'll see the institutions come over. And derivatives in particular, they need to build liquidity within DeFi. Also, I think the Oracle solutions can be better. We've seen many Oracle attacks, and derivatives pricing is based on some other price. So that's going to be highly important as well. But this is a work in progress. And if you see like pretty legitimate derivatives exchanges, on DeFi, I think that's a sign that the institutions will be here soon. Because derivatives are what they use for hedging. And if you're a bank, you can't just say, I lost a bunch of money on Dogecoin. You have to hedge your downside risk. You should probably know at what price points am I going to be in profit. You can set yourself up where if the market is stagnant for the course of 3 months, I don't make anything. But if there's a move 5% to the upside or 5% to the downside, I make money. And maybe your theory is that there's going to be market volatility, but I don't know which way. Well, you can come in and you can do, basically they have options for securities and things like that in the traditional markets. But you can just, in DeFi basically say, at this price, this is where I'd like to see profit. And you can organize like what kind of derivatives you're using in that way. So this will be really huge just in the long term, and what brings like big institutions, people with lots of money into the space, like full board. And also, where are these derivatives going to go? Where is all that value going to go? Well, it's going to, go on these underlying layer one blockchains, the dApps built on top. And, what are these tokens that are in cryptocurrency, Mickey? They're basically, visualization of value for the underlying blockchains. Like I would say, you have like XRP and the XRP ledger. XRP is the culmination of all the value that the XRP ledger brings. At least that's how I view these things. So with that sense, if we see, who knows what this derivatives market is really should be valued at. I mean, it's somewhere between like $500 trillion and $1.2 quadrillion. I mean, that's massive. If you brought that onto blockchain, I mean, we're talking about blockchains that have, values of potentially hundreds of trillions of dollars. And that's just crazy to think about. Now, do all these things move over? How long it takes? Who knows? But that's something in the very, distant future, maybe sooner than we think, that could happen.
Absolutely. And we could see new types of derivatives come along. Now with NFTs, those could represent certain components of traditional derivatives. So I know we hear a lot of talk of, oh, XRP is going to settle the whole derivatives market. That's a bunch of crap. Honestly, this derivatives market is moving over to the blockchain and to the DeFi space. XRP is one asset within that market, but we can't conflate, XRP into the traditional market derivatives. The derivatives are going to come onto the blockchain. We're going to see new types. That doesn't mean XRP is not going to participate. Of course it's going to. And Ripple's already got that integrated in there, and especially if it has a liquidity. So we're going to see different types of derivatives here. So especially for like liquidity pools, when you have to hedge impermanent loss, we're going to see different types of derivatives allow you to hedge those potential impermanent losses. So I know a lot of people hear derivatives and they think like, oh, that's what kills the gold market and kills, the silver market. Well, the difference is on the blockchain, everything is transparent and it can be seen. So you could see the counterparty risk here. You could see how much collateral they have. With the traditional markets back in 2008 with Lehman, it was unknown. Now with blockchain, you have this transparency. So if you could have privacy with transparency, you could create a whole slew of new types of derivatives. And as we have tokenization and we bring more and more assets onto the blockchain, you'll be able to get this composability. And now what composability means is one protocol is able to interact with the other protocol. And this asset now could be used in that decentralized application. Now that application's protocol works with this application's. And that's what Flare Finance has created with their 6 different protocols. So at the heart of most DeFi, right, is the decentralized exchanges. Think like Uniswap. So Flare X is going to be the Uniswap of Flare Network, one of them. There could be others in the future, and it's very possible. And then you have things like MakerDAO and Aave. That's going to be like Flare Loans and Probity Vault. Those will be where you put your assets in and you borrow against them. Now you're borrowing against your own assets. That's software. So those are things that there's software you're interacting. So there's certain things that this allows for anyone to interact with. There's going to be impossible to be able to regulate certain things because anyone in the globe can do them. Now, I think there is going to have to be guardrails. And now when we say guardrails for DeFi, what do we mean? I see it as KYC AML. That's one of the issues right now with DeFi. So don't get so distracted with Gary Gensler talking about DeFi. That's not the concern that I'm concerned about. It's the FinCEN and the Treasury. So how do we solve that problem? That's where self-sovereign digital identity comes in. So in the future, what to expect, what type of regulatory crackdowns to come, I think it'll be more of the FATF, but that doesn't mean it crushes DeFi. Self-sovereign identity is probably the best thing possible for just the world and finances because it will allow us to interact with all these different protocols and still be compliant, but we'll also be able to maintain an additional level of privacy that we never could in the past. So think, the banks won't have to custody all your data and all your identity and then it get leaked and get hacked. So it's just about the verification of that identity. And look at Wallet. If you go to one little section there, what does it say? Coming soon, KYC AML. What does it say on the newest RippleNet engineering blog? It says digital identity solution being built. That's what's coming. And that, I don't think that's scary. I think that's a really good thing because you know what that does? That brings in the institutions. Now they know who they're dealing with in that liquidity pool. And this is where I think, you know, right now, Patty, I think if you had to look at DeFi, 90 probably percent plus of it is taking place on Binance Smart Chain and Ethereum. I think in a year from now, 2 years from now, that's going to spread out dramatically. So just because it started on Ethereum and it's on Binance Smart Chain, we're about to see it start spreading. You know, it doesn't mean Ethereum is going to go away. I don't think Ethereum is going away. I think it's got to go through its transition, but it's going to spread. And it means that the pie is just going to be bigger. So it doesn't mean Ethereum is going to lose. It will probably lose market share, but it's just going to become bigger. What'd you say? 200 billion is locked right now?
Yeah, across all DeFi. So yeah, others including Ethereum. Yeah.
I could see $1 trillion by a year from now, like very easily. So now these are things that didn't exist in 2018. So when we talk about bear markets, bull markets, you know, there's this separation between what's happening with the protocols, the applications, the network rewards, and the DeFi, and then there's the market cycles. And how do those two affect each other? And you know, sometimes if you ignore all the applications, all the DeFi, all the staking, Cardano and Polkadot, 70% of their assets are staked. How does that affect the bear and bull market cycle then? How does DeFi and 200 billion being locked up affect the cycles in the future? I don't hear too many people talking about that. And it's just like, I shake my head. I'm like, why does nobody ever, the TA or traders, talk about that? Yeah, I get the cycles go, you know, they go in cycles markets, but now we have a different market. And these assets are meant to be used. So if the assets are meant to be used, there's more places to trade them. There's more places to lock them up. And there's more utility. And I think, you know, we have scarcity, we have utility, and then we have the big third one, yield. Yield. People are going to hold their assets if they're making money on their assets instead of just selling out to fiat. And I don't know if you want to jump in here, Patty, a little about what is your thoughts on, you know, Coinbase and the SEC? Or you have something else to say on this?
I mean, yeah, that's a tough one. It's like, you know, are they protecting banks because people can use Coinbase as their bank essentially and, you know, earn 4% interest on USDC it was going to be. Like I have a friend that uses, you know, Coinbase card and as a debit card, and he'll just keep, you know, basically stable coins on there. So he's earning some interest in the meantime. And, you know, maybe he can use that interest to branch out into some other cryptos where there's, you know, price appreciation attached with those and things like that. You know, it's either, you know, the SEC just sees, oh, you know, Ripple and Coinbase are two of the biggest ones. We can probably skim some money off them. You know, are they protecting somebody in the banking industry? Or are they protecting somebody in some other industry? You know, who's telling Gensler what to do? Like, you know, he's within an administration. So we know there's people like, you know, Janet Yellen at the Treasury and other areas like that. How much influence are they having, you know, over the SEC? I think we're going to have to see how this one plays out. And, you know, if they actually, in fact, you know, go through a lawsuit and all that stuff, if Coinbase decides to launch. But ultimately, I think it's going to come down to, you know, the people that make laws, whether that's, you know, on an international level with things like the FATF and, you know, some of these other like IMF or some of these other big World Economic Forum. You know, is it going to come from there? Is it going to come from, you know, in some countries like UK, Japan, Singapore, their legislators have been really forward thinking as far as, you know, getting laws and regulations out there on, you know, what is what. The US is very much behind in taking this terrible approach, but eventually, and I think we saw this with the infrastructure bill, you know, the lawmakers have the final say. If they want to put a law through and it passes, then that's what's going to go into law. It doesn't particularly matter what somebody at some agency said once they make that law, if it overrides what they were saying. So ultimately, that's where it's going to come from in this, like, you know, short term. I don't know if it's through the rest of the year, if it's for another year. You know, I think we'll probably keep seeing these enforcement actions, unfortunately, until Congress feels it's appropriate to finally make laws around this.
Absolutely. And it's also possible we get it from the judicial system, the courts. Yeah. So that's where Ripple is right now. So the court is going to make the decision on this law, and that's what their job is, to interpret the laws. So instead of the regulator. The judicial system is not part of the government. They're supposed to be there to interpret it. It's unfortunate that Ripple has to go to the court to do this because Congress, like you said, Patty, the legislators aren't doing their job, and they're not creating new laws for this new technology, and they're letting this rogue regulator just go nuts. I think with Coinbase, I'm going to think logical. Who does it hurt the most if Coinbase offers a whopping 4% on USDC? The banks. They charge what? They give you what? 0.5% or less on right now?
I don't get any. So
you don't
I haven't
even
gotten
get
that
any
percentage forever.
You don't even get any. So now look at who it hurts, right? Now you could get 4% if I keep my money on Coinbase, or I got 0% there. How does that affect the financial markets? That's what I think this comes down to. Now, what I found really, messed up was that they didn't even give Coinbase a reason why this is a security. How can a stable coin that earns interest be a security? But one thing I find interesting here, but Algo, which is from MIT, Coinbase pays 5% on, or 4%, but that's okay. But USDC is not. That was kind of strange there. So it's like, favoritism, speculate there. But I'm in New York, and that's the only asset on Coinbase that you could earn interest on is Algo. Why Algo? So and they had an ICO. I mean, it's just going to say, and I know DAI's done some great videos about the Joseph Lubin thing, and I totally agree with all that. I've come across that in the past with Ethereum and Joseph Lubin. There's been, I gotta look for the video. There's a conversation between him and Brad Garlinghouse on a stage, and they disagreed. So there's definitely animosity there between those two. Ethereum Foundation is hiding away in Switzerland. They're not even a US company. And he's from Canada. So Ethereum Foundation is not even in the US. And most of them miners are in China. Meanwhile, you have Ripple, who's here in the US. So I think with this Coinbase thing, one good thing that happened, Patty, here is it really riled up all of the crypto now community. It's not just the XRP community. Now everyone's riled up with the SEC. Brian Selk is coming out. Everybody's coming out like this has to stop now. So, when you talk about settlement with the SEC, this is a really hard topic to discuss. But I think at this stage, my speculation is I think Ripple has to go for a summary judgment to get clarity by law, which John Deaton has said. They need the clarity that the courts say XRP is not a security, because it doesn't seem like the SEC is going to stop. And getting a win with the lack of fair notice defense, that would cut the legs off the SEC, and that would restrict their power. And that's the only thing that might help. So even if we do get clarity for XRP, how does SEC enforce all the other aspects of the crypto market? At least this would take away some of their power. So Ripple has this decision to make. They have this war chest of money. They're how many months in now? We're almost 10 months in to fight. I think we're getting close to the end here. And, I just was shocked with the Coinbase thing, Patty. I was like, 4% interest? Really? How can that be a security? What is it about it that's a security? Who issued it? I don't know.
Yeah.
One of those head-shaking moments.
Yeah, absolutely. But yeah, for the last part, Mickey, I just wanted to show a few screenshots from a Masari DeFi report that came out a couple days ago. And this kind of gives you an idea about, they call it the asset superclass triangle. So all assets can be grouped into three classes: capital assets, commodities, and stores of value. Either may be the first member of all three. Ether may be the first member of all three classes ever. So with that, Ethereum, Ether, which is their native token, can retain purchasing power, generate income, and be transformed. And so with that, you can see over here, they kind of have Bitcoin and gold in between a store of value and commodity. The US dollar is a store of value. XRP, I think right now kind of fits into this commodity and store of value. But we have assets like Ethereum that also act as capital assets because they generate income natively. And that's something that Ethereum will have with the proof of stake 2.0 or Ethereum 2.0. Things like Cardano will have that. Polkadot, FlareNet, the Spark token from Flare Network. So we're getting into a world where these crypto assets are commingled across all these different types of asset classes. And especially with the US, where we have it broken out into different agencies and divisions, I can see where that's causing a problem with this stuff. And obviously, we've seen the SEC and CFTC kind of go at it before. But also on top of this, so let's take a look. Here is total value locked in smart contract platforms. Includes Ethereum, Binance, Avalanche, Solana, Polygon, Phantom, Terra, which is Luna, and then any others. So we can see that it was Ethereum all the way up until February of this year when Binance came out with their solution. And then we've kind of seen things like Polygon, Solana, Avalanche start to ramp up. And we're also seeing, I mean, obviously, TVL is going to go up as the market goes up. But with that, we're also just in general seeing more DeFi applications out there and more value going into them. And also, you can see like Ethereum just hit a high in TVL, and that's with all these other protocols launching and having their DeFi solutions having come out. So it's like maybe Ethereum loses market share over time, but that doesn't mean that the value that's on the network is going to be decreasing. It just may be increasing at a lower rate than some of these other protocols that are getting off the ground. And then finally, the last one we can look at is smart contract market by market capitalization. See, Ethereum is the big one, and it kind of kept running up. It actually had some split with Cardano and any others that are included. A run up to the beginning of the year when Ethereum was really breaking out, and then since then it's been falling as things like Cardano, Dot, and Solana especially have been soaring in price. So I just want to point these out. There's still opportunity out there. These assets have a lot of power behind them and a lot of abilities that a lot of traditional assets do not. So what does that mean for the future? For me, that's something that's really enticing to be a part of. That's something everybody has to come to on their own. But yeah, that's all I got for this, Vicky.
Yeah, these are more than just assets. And I think, that perfect example there. ETH isn't yet there with that earning yet. That's ETH 2.0 in the middle. But you could put Spark right there in that middle. It's going to be used as collateral. It's going to have earning capabilities and used as a currency commodity. So that's something that fits right there in the middle. Dot is something like that too. ADA is like that. So these are new types of assets, but at the same time, they represent this protocol that's an underlying network that supports all these applications. So, sometimes we get stuck into just looking at a ticker. Did it go up or down today? But you have to kind of look out long term as this total value locked, and these, charts show. They're important to look at these charts as you look at like the TA charts. And you don't want to get too lost in those TA charts because you could drive yourself crazy with the market cycles. But these are factual things. They're not speculation. That's how much money is locked. That's almost as much value locked as there was, in March 2020 of the whole market cap of crypto.
Yeah, for real.
That's crazy. So what is it going to be in 2022? What's it going to be in 2023, 2024? Think about how much value is locked. It's going to be more and more and more. And think of Spark. How much is going to be locked up in the F asset system of Spark? Right? And how much liquidity of XRP is going to be locked up being used for liquidity in ODL?
Yep. Nope, you're very right. So lots of time for this space to evolve, and solutions that are good now may not be as good in the future. So I think it's going to be a rapidly evolving market, and it's going to continue hot throughout this decade. But with that, that's all I got. Mickey, you have any last words for this one?
No, I thought that was a great video. And just please, I know this is very high level and it's a lot to take in, but just start somewhere. Learning about DeFi, learning about what liquidity pools are, learning about, collateral debt positions, learning about what minting synthetic assets mean, learning about the different protocols so you can understand what is an FTSO with Flare. Read the blogs. Just don't listen to what people post on Twitter. Twitter, you have to be very careful with. Learn what governance is of networks. Learn what a governance token is. You could also check out our free website, the DeFiStandard.com. It's a great source of information for everything to do with Flare and DeFi. And everything here is not financial advice. And I'm Mickey B. Fresh.
Patty XRP.
And we're out.
See y'all.